SOFI stock is up 15% after a strong earnings report this morning. Now you want to know, is the stock still a buy at these levels or not? Now, I'm going to dig into it. I'm going to show you a quick earnings update. I'm going to look at the valuation and a chart, and I'm going to tell you my opinion. Now this is one of those stocks, you either love it or you hate it. Is this a meme stock, or is it something you can still buy right now and make profits in your long-term investing portfolio? Let's dig in and find out. So at 6:07 a.m. I posted this on Twitter. If you don't follow me, it's at Fired Up Wealth. SOFI beat on GAAP EPS 5 cents, beat by 4 cents. Very strong beat. Revenue of $443 million. That's 58.4% year-over-year growth, beat by $17.58 million. The Q4 net loss, $40 million. That's 64% narrowed from the year ago net loss of $111 million. They're getting close to profitability. In fact, if you look at the EPS loss, Q1 was 14 cents, Q2 12 cents, Q3 9 cents, and then this Q4 here only 5 cents. So it's still not profitable, but it's getting closer to being profitable. Listen to this, adjusted EBITDA, $70.06 million. That's up from only $4.59 million a year ago. It was up 7% pre-market. Last time I looked, it's up 15%. I'll look at a chart here in a couple minutes. So 2022 year in review. SOFI launches Break Up with Bad Banking marketing campaign. You can see in February, they acquired a company here, digital cloud-based banking platform. SOFI Relay rolls out credit score monitoring and auto tracker in May. They launched Web3 and SOFI Smart Energy ETFs in August. They started options trading in November, which created more volatility. So the company is losing money, but it's on the right track. It's growing. You can see the year-over-year growth. It's very strong. People always say, why don't you just buy like a bank stock, a Bank of America? It's a cheap PE ratio. It's profitable. It pays a dividend. The answer, guys, is growth. SOFI is growing at an enormous clip. So this is not a traditional bank. This is going to be more of a fintech type play. It's focused more on the younger generations. It's growing. I really like the fact they have SOFI Stadium. So both the Los Angeles Rams and the Chargers play at SOFI. It's given it a lot of exposure. They added 480,000 new members in Q4. That's bringing the total to 5.2 million. That's 51% year-over-year growth. And you can see a steady growth upward, right? You can see back all the way to 2019, 976. This is in thousands. And you can see that growth continuing to trend upwards. Products, they added 695,000 new products in Q4. That's mind-boggling to me. I'm not even sure how that's possible. Bringing the total to 7.9 million. That's 53% year-over-year growth. So Galileo, that's another exciting part of their business. You can see the growth here, reach 131 million accounts. So quarterly performance, look at this, 14x year-over-year growth with adjusted EBITDA of 70 million. Look at that growth. This is only 5, ramped all the way to 70 in just a year. And you can see on an adjusted EBITDA, in 2019, it was negative. This is in millions, 149 million, now positive 143 just in a few years. They also raised guidance. So listen to this, revenue, Q1 revenue expectations, 430 to 440 million. Expectation estimate, the consensus was 426 million. So you can see that GAAP net revenue, it's up 60% year over year, and the adjusted net revenue is up 58% year over year. This is a quote here. We finished a remarkable year with another quarter of record financial results and continued strength in member and product adds, as well as cross-buy momentum. We generated our 7th consecutive quarter of record adjusted net revenue, which was up 58% year over year for the quarter and surpassed 1.5 billion for the full year, up 52% versus 2021. Record revenue across all of our 3 business segments, lending, technology platform, and financial services, drove our record fourth quarter adjusted net revenue of 443 million and record fourth quarter adjusted EBITDA of 70 million. Our continued strong growth and significant improvement in GAAP income margin positions them well in 2023 for another year of significant revenue and EBITDA growth. And listen to this is huge. Reaching GAAP net income profitability in the fourth quarter of 2023. So SOFI is saying that they're going to be profitable this year. And that's huge because at one point this stock was trading underpriced to book. Now the stock, of course, has popped nicely off the news here, off this earnings report. Price to book ratio on the 27th of January was 1.06. So you can see right now it's trading at $6.79, up 14.31%. 52-week range, it got down to $4.24, and the 52-week high, $13.55. Now, of course, this doesn't have a PE ratio because it's not profitable, and you can argue that $13.55 was ahead of itself, but is it a buy under $7 still? Now the short interest, as as of January 13th was 10.94%. I'm sure that's lower now, but what happens is when you see a 15% spike, more short sellers will come in and they'll basically wash out a lot of those profits. So this is a trading type stock and it's going to be volatile. Next, guys, I'm going to show you a chart. I'm going to tell you if I think it's a buy still or not. Before I do that, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/fired up wealth. You can also check out our private Patreon community. That's patreon.com/fired up wealth. And we do chart day every single Wednesday. And when you see orange, that's a previous chart day. When you see yellow, that's the most recent chart day. Now, we just covered this stock last week. You can see back in November 23rd, I said $4 to $4.15 is possible. Watch $4.25 to $4.50 first. Got down to $4.24. It double bottomed and it popped nicely. Now, right now, support is around $5.25 and it's running pretty hot. It's at $6.80. So last chart day, I said watch for $6, then $6.25, drew up some of these blue lines. Now, of course, the fundamentals, earnings, it's going to be more important than technicals and it can drive the stock higher. You can see it topped out today about $6.92. Now, this R3, these are Fibonacci pivot points. This is up here about $7.33. Now, you'll probably see some consolidation between here and $7.25, $7.35. It's always hard chasing a stock like this. Here's what I will say, okay? It's still not crazy expensive, especially for the growth that you get. The problem is now they have a bank charter. Everybody wants to compare them to a bank stock. It's not like a bank stock. It has growth. It doesn't have a dividend. It doesn't have a P ratio. They're very different things. Now, this is very popular with the younger investing community. When you think of Gen Z, you think of millennials, even Gen X, a lot of people are very bullish on SOFI. Now, I understand if you're bearish because the thing about it is a lot of their loans, they're lower quality loans. They don't have collateral. So they're not as many auto loans, home loans, things like that, like a Bank of America would have. And so when you go into a recessionary period, those type of loans have a higher default. They also have headwinds, of course, with student loans, but they've been battling through that and they're proving that they can weather the storm. So for me, I'm bullish on this stock. And if I'm thinking long-term, this is still a good investment in my opinion, even under $7. Now, with that said, it just ran really hard from $4.24 to $6.83. So you have to be careful chasing. What I generally like to do is I like to back myself into position in dollar cost average. If this pulls back a little bit with consolidation, you add a little bit here, add a little bit of there. The key here, guys, this is long-term investing. If I were trading, I'd be looking at a daily chart with 2-minute candles, 5-minute candles. This is a 1-year chart with daily candles, very different things. But if I'm a long-term investor and I think of this stock at $7 or less, I think it's still a buy. Of course, I was pounding the table for $5 and less, and that's where I would have loaded up, not necessarily here at $6.85. But I'm bullish long. I hope this video is helpful, guys. Make sure you drop a like, drop a comment, subscribe to the channel, click that bell for notifications. Have a great rest of your day. Take care.